Good morning, everybody. We will be getting started here in just a few moments. We'll start right at the top of the hour, 9 a.m. Eastern. And that'll give you a chance to kind of look over your notes and things that we're looking at. There are some new prep screen zones up there. So these will be the areas we're looking for turning points. We had unemployment situation or non-farm payrolls that came out a little bit earlier. And the market got a nice reaction off of that. So we'll continue to monitor that and look for some trade opportunities. So happy that everybody's here, and we'll get started in about 6 minutes, okay? Looks like the indexes are continuing to move up. Yeah. Take a quick look at that. Yeah, we'll be getting started here in about 4 minutes. Just want to watch. We got a little resistance line that the NASDAQ is coming up on. So we got quick little adjustments. Several of the breakout trades we had ready for the session. Copper's already broke out. Wheat on a move up. We'll have to wait for a demand zone entry on copper and on wheat and on nat gas. Boy, the bonds and notes are really dropping as the yield prices have gone way up, and I'll share that in just a moment. All right, let's get ready. We got about 2 minutes before we get started. Make sure you have your areas marked on your chart. We'll look for some opportunities to be taking trades, and we'll kind of look around to see what's going on in the overall marketplace. Wow, what a nice move. All of this is really light volume. All right, you got about 2 minutes, get your coffee refreshed, and we'll jump in and get started here. All right, here we go. The long-awaited opening bell here. We're about 30 minutes before market open. Welcome to our live trading room. Today is the 2nd of May, 2023, and we're excited to have everybody here with us. Always want to reach out and thank the team that backs me up and keeps everything going for us. If you have questions and you're visiting us on the YouTube channel right now, welcome. But if you have questions, type them in the chat. Don't hold them back. It's always good to ask questions while the question is fresh. Okay, so we'll do our best to answer those. The team will either answer them or they'll push them over to me to directly answer. Okay, so yesterday it was the 8th up day in a row for the indexes, and the S&P and the NASDAQ also closed at or above the 50-day simple moving average. We are approaching the April 2nd tariff announcement where we had that massive drop and where the markets did pull back quite substantially over a period of days, and we've almost fully recovered that. So lots going on there. There's not much room in the way to the upside. Okay. Now, it's rare to have 8 up days in a row, today being the 9th. Okay. So in the back of my mind, I am in the back of my mind, I'm expecting a down day. Okay. Now the markets are shooting up right at the moment. But if we take a quick look out at what's going on with this, you can see that there's very light volume as far as price moving up. Okay. And when we look at the Dow 30 stocks, even though we have currently about 18 Dow stocks up and 2 Dow stocks down, okay, look at the volume in the pre-market. Okay. Very good indication that there's going to be some whipsaw, some additional volatility going on as we start this session out. The light volume is one big odds enhancer that you can get some pretty big whipsaw. Okay, so monitoring the volume intraday, monitoring the volume at certain times of the day, just to see if volume is normal, is it heavy, is it light, okay, can greatly impact how you're how you approach a trade. Okay. All right. S&P, we do have a new prep screen zone updated today, 5739, 5773. And we got a couple more on top of that. Okay. The volume on the Dow 30 stocks, as we just talked about, is pretty light. We have 2 Dow stocks negative, and excuse me, looking at 17 positive. So net results, we have 15 positive. If we take the positive 94 versus the negative over 94, net the result, multiply that result by 2, okay, which we're looking at, let me do that calculation one more time. We're looking at 15 positive. Now multiply that by 2, we get 30. Right now, cash value equals 30 and S&P futures are trading at 66, 67. Okay. S&P futures are overbought, trading at a premium relative to the cash market. Always remember, when trading futures, futures follow the cash market, and recognizing the discrepancy where the cash is at, and then looking at where futures are above cash or futures are below cash, okay, it's kind of like stretching the rubber band down and it snaps back up to the cash market, or stretching the rubber band up and pulling back, okay? Very important to understand, futures follow the cash. They don't lead it, okay? So right now, future S&P futures are about 37 points overbought relative to the cash market. Cash market also having light volume, okay? So the light volume does imply a little more volatility, okay? A good way, it is always good to understand the trading environment that we're stepping into. Is it a very easy trading environment? Is it more hostile, okay? Now we're also looking at the S&P right now that has closed, or sorry, opening, traded, excuse me, prior to the economic report. We were inside the prior day's trading range. Now that after the report, still before the regular session, prices trading outside of the prior session's range. Now, outside days, you have a little more leeway. You can take breakout trades. You can take demand and supply trades. Okay. It's more of a trending environment. Okay. Now, there's also times when we need to expect the potential turn. Okay. Little larger time frame, SPX.X, which is the S&P index. We've been tracking the different types of gaps. Okay. And from H.M. Gartley, his book published in 1935, How to Profit in the Stock Market, he lays out a nice little gap plan where you see the breakaway, the measuring, and the exhaustion. Okay. We also take 40, from the measuring gap to the breakaway accounts for 40% of the estimated price move. Okay. So we've had an exhaustion gap yesterday. We're looking at another gap up on the equity index, or sorry, the ETFs. Okay, you can see IWM, Diamond. And when you have gaps going in the direction, so they're gapping out in or gapping up in an uptrend, okay, this is not a breakaway gap. This is more of that exhaustion as price pushes up. Okay, they can easily be retraced. By recognizing the larger time frames, we can then anticipate that we're not at the beginning of this uptrend. We're getting close to potentially a turning point. Okay, this is why we're a little defensive, taking the 8 up days in a row, expecting a pullback today. We're also going to watch how the equity indexes defend that 50-day moving average. Okay. Now, if you can imagine what that daily candle will look like if price closes back below the 50 today, okay, it'll be a pretty bearish candle, and we might be looking at a couple of more down days going into next week. Should today close positive, we're going to look for two more up days, which is, how do we splice into this trend to participate? Okay. Now, before I go more into the other equity indexes, NASDAQ, Dow, and Russell, I want to get set up on the crude oil, looking at the open range candle, the 5-minute open range breakout trade. Okay. Now, I'm still a little bearish on this on crude oil based on the charts. Okay. But sanctions and government policies, U.S. government policies about people buying Iran oil at this point in time, okay, is making oil a little more volatile. Now, when I give myself permission to trade crude oil, I recognize the Globex range and I compare that to the daily ATR, okay? We're giving you a little bit of explanation as why we're making trades, taking trades, and kind of using environmental odds enhancers as well as what's on the price chart to help us execute on a trade. Okay. So news, economic reports, price patterns, they all come together to help us make a decision if we want to apply a trade or not. Right now at the market open on crude oil, we're between the pit and the 5 p.m. close. Okay. The larger time frame price already went down. Let's see if I have that picture over here. Yeah, we had crude oil where it just came off of that demand. So always make reference to the larger time frames to see where you're at and where things are going. Okay. Crude oil making a fresh accumulation of orders just under a resistance. Okay, a break above 60 would then take us back up to 63. Okay, which may be the direction they want to take us with the sanctions and things like that, and kind of taking some of that oil supply out. Okay. All right, natural gas. Okay, little wide zone for the open range breakout trade. I also want to point out that natural gas at the open, okay, this is something that we've been tracking quite a bit, is at 9 a.m. Eastern is when we have the pit open, okay? Very often natural gas is about 50% of that daily ATR at the pit open. 2 hours before the pit open is where the big players come in. They start their day. They start putting things together, matching up orders, and then start processing those orders in the pre-market between about 7 and then the pit open, okay, is when everybody starts to get wild. Now, prior to this, we see that at about 4 a.m., oh, sorry, at 7 a.m. Eastern, okay, the Globex range was narrow, okay? If we understand that the Globex range by pit open is 50% of the daily ATR, then we have an idea of where price is moving up to, okay? There's a lot of little details that you can use. We're getting a nice pullback on gold. We have our first demand zone as gold is approaching. So we'll look to set that trade up. Let me set an alert. So once price gets there, I know I need to come back to this chart. Enable that alert. Okay. Now it's a nice strong drop. Okay. When you see very strong drops, okay, most people flee and go to the other direction. But the stronger that price arrives back to a demand zone, okay, just shows you that the big banks and institutions are waiting for price to come back to that level. This is where we have unfilled orders. Now, there may be, as if you're using indicators and oscillators to get into a trade, you have to wait for price to come into the zone and then approximately 5 to 8 bars after it leaves, and you get your confirmation. Every trader needs a way to forecast potential turning points, okay? You can, some traders will take, 2 points identify, 3 points confirm. So I got 1, 2, 3. We got a confirm uptrend. Okay. And we can extend that trend line. We see that, hey, there's some trend line traders coming in. Okay. Right about the same place we have unfilled orders. Okay. Unfilled buy orders. So indicators, oscillators, forward-looking techniques. We might even bring in, traders using from the low to high and Fibonacci retracements. What we're doing right now is we're looking at all of the information and we're going through several different techniques. One technique is supply and demand, what that picture looks like. That second technique I just talked about was a trend line, okay? A support area that price may bounce off of. We have Fibonacci retracement, 50%, 618% retracement right in the same places we have unfilled orders. We have multiple traders, different styles of traders thinking the same thing at the same price level, okay? And when everybody's thinking the same thing at the same price level, it becomes self-fulfilling prophecy, okay? So I do have an alert set for gold. Once price gets back down into that area, we'll be looking at potentially taking a long trade. By using the leg-based group of candles, we can assess what that risk would be so we can properly size that position, okay? And that right now we're looking at about 32.42 to 32.34. So we got about 10-point risk on that, okay? Now, 10 points may be outside your trading plan, okay? But recognizing that risk, comparing that risk to your trading plan will keep you on the right side of things, okay? Don't risk more and risk outside your trade plan because you have a good feeling about a price chart, okay? And I've spent a lot of money learning that lesson. Okay. So due to on the globe, let's come back to crude oil, okay? I am looking for price to pull back a little bit. I'm going to attempt to take the trade short right now from the open range breakout, 58.893. My stop loss will be 59.20. I'm going to stick with a couple of micros at this point. And I'm going to take the trade short.
Order filled.
And we'll come back in about 59.20 and place my protective stop loss. One thing that we've observed when they start posting news and economic announcements, and if those announcements tend to come from the White House, okay, is they get a big reaction and everybody gets nestled in, and then it retraces the whole action, okay? So we've noticed that over the last 13, 14 weeks, as the new administration has taken place, that the market conditions have changed, and we've started to document more of those changes to help us assess when to participate in a trade. Now, keep in mind my risk, 58, I got in at 58.92, and my stop loss at 59.20. And as I come back up, I can see with a couple of micros, I have $56 worth of risk. Okay. Now, yeah, it may not seem like a lot, and maybe your risk says you can risk $560. Okay, I get it. Okay, but my trading plan, and based on the people that view this, $560 might be too much risk. Okay. Knowing what your risk is ahead of time, knowing what your potential reward, looking back down about 56.62, where we have a zone. And we have another little area right here where price changed direction. So target 1, 58.02, and target 2 down at 56.62. Okay. Now, yesterday when that news came out, it was, sorry, May 1st, we started to see sanctions, and then we started to get, we got some pretty big market reactions off of White House announcing sanctions on Iran and nobody to buy Iran oil. Okay. And if they do, there's some heavy consequences. Okay. So I'm expecting that price, based on that activity, when that news broke, the price will come back to at least 258.02. Okay, so that'll be my profit objective. Okay, risk on a trade, profit objective. All right, back to the S&P. Let's make a couple of tune things up just a little bit. We have been pressing higher, and we can see that our prep screen zone is up a little bit further, and price keeps pushing up to that Globex high. Volume is coming in a little bit better. We have one Dow stock negative, and we now have 18 positive. So that's 17 at 34. Cash equals 34. S&P futures are trading at 69. S&P futures overbought relative to cash. Okay. So reason I point that out is that very often at market open, cash or near around that market open is cash and futures balance out. So in order for this to balance out, either the stocks have to start shooting up to balance out with the futures, or futures come back down to balance out with the cash. If we take the cash value at 34, we got basically 35 points pullback on the S&P to get cash and futures to balance out. So if we take the current price and we minus 34 points, that's going to put us right back down into the origin of that pretty strong move up. Price moving back down that far is going to have an impact on how people see the market open. Okay. The reason I'm not jumping into a lot of trades right now and really going nuts is you can see that Apple and Nvidia, which are two large market cap stocks, if they're not going in the same direction, things can be choppy. Okay. The other information that I want to put out there, okay, that help us understand market conditions. Okay. US dollar is moving back lower while the 10 and the 2-year yield are shooting up. That is a market condition that is very choppy, can be volatile, and difficult for trading at the open of a session. A good time to be patient and wait for your trades to come to you. Generally, when I'm waiting for trades, I start to teach more. Okay. So I guess I'm an odds enhancer as well. Now, the other thing to keep in mind is that the trend, $TRIN, which is the ARMS index developed by Richard Arms, 1960s, I believe, okay, is trading higher, okay, at about 1.9 in the pre-market, okay? Now, when the indexes are dropping and the trend is high, that is the best market condition to look for going long. In this condition right now, markets are going up, okay, and the trend is high. This to me implies more of a short squeeze, okay? And if you apply the light volume, okay, you can start to put the pieces together that they're kind of squeezing the short traders out, okay? So as we are preparing for a down day today, okay, after 8 up days in a row, it's a very high probability. Seeing that they're putting a short squeeze on here, we might get a volatile price reaction or a drop, okay? So we're going to be looking at, as futures are overbought relative to cash, we're looking for price to go up and find the sellers, okay? Now, that doesn't mean we have a trade entry right now. Pre-market indicator developed by the NASDAQ. It's called the QMI.X, okay? Or QMI if you're using TradingView, okay? The pre-market indicator has a 92% correlation as to traders' sentiment at the open. And right now we're showing a gap up, okay? So trader sentiment is bullish, But as the market is going up on lighter and lighter volume, that's a negative divergence as well. Okay. We're also seeing that the pre-market volatility index has dropped lower by almost $1.90. Okay, a little bit more. Okay. So when we look at the volatility index, we look for the VIX if it's gapping, if it's moving up in the pre-market above $1 or below $1. Okay, it can imply a lot more. Well, it can imply whether traders' sentiment is more bullish or more bearish. Okay, a lower reading on the VIX implies that fear is dissipated. Okay, we're looking at less fear in the market. Okay, if the VIX is high, markets are dropping, then we have a good opportunity to look for some buyers. Okay, so a lot we can get out of this. And the first thing that I look at here, $1.10 and the 2-year yield, if they're not correlated, tells me to wait a little bit longer till the session opens to get a better feel, and also look at whether futures are overbought, oversold, whether we're getting a short squeeze, trader sentiment at the open. Okay, a lot of things that we look at. Okay, not only just the price chart, but what's outside the price chart to help us make those trading decisions. What is coming up today? Okay, we do have some different reports coming out. Some have already come out. We've got factory orders coming up. And then we have more about Canada and what things are going on there. We're also going to be paying attention, which we've been documenting quite a bit, is the market on close at MOC and the market on open, whether we have a buy imbalance or whether we have a sell imbalance. Okay. Okay. And this is important. Yesterday we had at the close a large buy imbalance on the NASDAQ and the MAG 7 and also on the S&P. So when you have large market on close buy imbalances, we're looking for prices to go up in the overnight session once you find your entry. Okay. Big market on close sell orders or market on open sell orders. We'd anticipate that once price goes into supply, we have a high probability that those sell orders are going to impact how trading starts off at the open of the session. We got about 5 minutes before the market on open orders get published. For the imbalance, we're going to see if it's a buy imbalance or a sell imbalance. Okay. All right, let's move over to the NASDAQ. I need to make a couple of adjustments. NASDAQ is now an outside day. And the reason I measure the Globex range, can compare it to the daily ATR, is to help me get a feel of whether we're in a trending environment, choppy environment, or whether we're looking for the bear trap or the bull trap. Okay. So daily ATR is 550 points. We're looking at 388 as far as the Globex session, which is more on the wider side. Okay. If this Globex range compared to the daily ATR is between about 70+%, okay, then we're looking for the bear trap and the bull trap. What we know by looking to the left-hand side of the chart is there's very little resistance. This is almost like a gap in this area, okay? And that prep screen zone is right tied closely to where the I think this one's May 20 or March 23rd area. NASDAQ has already come back into that area for the April 2nd. Okay. If the NASDAQ opens inside, we're really close, 3 minutes away. So if the NASDAQ opens inside the prior sessions, a very high probability we will fill the gap the same trading day. Okay. Along the way up, we may have some unfilled orders right down in this range at the origin of this move up. At this point, there were no more sell tickets, only buy tickets. That's why price went up. Okay. Let's see. I know I'm trying to cover a lot of ground here. Let's get the Dow. But you will notice that when the conditions are not greatest to place a trade, we need to evaluate more things outside the price chart. We need to get a better feel of what's going on. Dow is looking to open outside the prior session's range. Okay. Often that leads to a gap and run. Okay. As we look at the Dow average true range for the daily chart, 869, we're looking at 558. So yeah, the bull trap or the bear trap is in play. Okay. And Russell did come up and tag the 50-day moving average. Okay, and let's look at the larger time frame. Russell is still outside day, and we're almost right at the open. Okay. Our internals. Okay, crude is hanging tight. I know my risk is about 56 bucks. I accepted the risk, acknowledged it. Okay. And just waiting to either be stopped out or we're going to be looking for that profit potential. Okay. Well, nat gas still making a very strong move to the upside. No trade on that right at the moment. No entry on gold yet. I'm trading the micro Bitcoin next level to the upside. We got a high tight base on that, and we're looking for the at 100,000, which would then really set a nice tone for the all the influencers on the web around cryptos. Okay, I got to keep in mind, crypto market right now is a lot like the listening to the gold bugs. When the gold bugs say buy, it's time to sell. When the gold bugs say sell, it's time to buy. Okay. We did miss a couple of breakout trades on wheat. Aussie dollar getting a nice move to the upside. We do have overhead supply. Okay, I missed the breakout trade. Now, acknowledging that you missed a breakout trade or missed an entry is part of good risk management. You're not going to chase the price. You know where your entries are, and you're going to apply those entries and proper risk management. Okay. Part of wheat building a fresh accumulation of orders. And I want you to look at that U-shaped pattern right there. Okay. That is also important. Okay. We see this U-shaped pattern. If you flip it over, you will also see that market bottoms and market tops, there's a lot of these patterns when they have that. It's like a drop and a base and a rally. Okay. So nice move on wheat. Wheat is coming into a speed bump area about 545, 549. And as price hits that supply zone, okay, we may be looking for price to come back down to demand. Okay, so there's a couple opportunities on wheat, looking to take a trade short, 545, 549, and then looking for price to come back down and see to the buyers. Okay. Markets are open. Let's see, what do we have going on with the market on open orders? Market order, yeah, look at that. Okay. So right now we have a big buy imbalance, and the NASDAQ is a little bit lighter. Dow has a big buy imbalance, but the Mag 7 has a sell imbalance. Okay. A little mixed on that. Okay. Now, markets have moved up. The buy imbalance coming in, those orders are placed. They cannot be canceled. Okay, at the time of open, once it passes a certain time, so they have to be processed. More buy orders, buy imbalances on S&P and the Dow. and sell imbalances on the Mag 7 and sorry, a small buy imbalance on the NASDAQ. I know we're just bringing in information. We haven't made the trade yet. Okay. Markets are mixed. Understanding the information we have collected, the information I'm displaying is telling me to be a little patient. Okay. Let's see. I don't know. I want to make a trade just like everybody else, but sometimes you have to wait. And that is always the more difficult part of trading for me. Okay. Good indication, Apple dropping, Nvidia going up, two largest market cap weighted stocks on the S&P, Dow, and the NASDAQ. Okay. If one is down and one is up greater than $1, okay, you're going to see that the market's going to be mixed. Okay. Risk will be elevated as we watch the volume come in. There's not a lot of, it's not very aggressive at this point. Okay. The other items we mentioned before is we're anticipating a pullback. We also see that the futures overbought relative to cash. So we now have 2 Dow stocks negative, and we have 24 that are positive, so 22. Okay. So right now, cash equals 44. Futures are trading at 67. S&P futures are still overbought relative to the cash market. Okay. So we're looking for price to go into a supply area and then pull back. NASDAQ, we are also prepared for the gap fill. Price opened inside the prior session's range. The gap fill is down at 19,808. Okay. And let's check our internals. Okay. An extreme move on the NYSE upticks. Okay. And, you get a lot more upticks when you're short covering and when they're buying. When it gets to an extreme, you're looking for the gears to shift. Okay. We also see that the advancing issues over declining issues are pretty high at the moment, and fear has subsided in the volatility index. We have wheat just went into a supply. Okay. Now, looking at the larger time frame and the bigger trend on wheat, okay, I don't want to get bearish. I mean, we are in a context of a high time frame downtrend, okay? But what we're looking at, this is just a leg base, okay? It's not in the right location to take a short trade. So I'm going to be prepared to take a long trade if price comes back down to where the buyers were that started to push the price up for this session. Understanding the different techniques and what looks good for the banks and institutions, okay, what their footprint is, helps us. Okay, and we're now starting to see a little pullback on the, let's drop down to a smaller time frame. Still a mixed market. NASDAQ, sorry, Nvidia up, Apple's down. And we're taking a measurement of what the bank index is doing. Don't fight the banks. Okay. Now we are seeing a pullback, but it doesn't necessarily mean we have a short trade entry. Price did not go into supply. So a fresh accumulation of orders needs to be built. It is getting a nice move down on a small time frame there. As price comes back down to the origin of the economic report, we do have a leg base right there. Markets are mixed, so the risk is elevated if you're going to participate in the long. Crude oil, our profit target for crude oil is we have a risk at 59.20. That's our stop loss. And our first target is 58.02. And of course, we need to get clear that Globex low to get to that area. Okay. Now gas running out of steam, gold, price. Yeah, gold is still waiting. Stack. Okay, we do have a new accumulation, a buy territory in the context of a higher time frame uptrend. So we have a demand down here at 19,928. Okay. I don't have any fresh accumulation of sell orders at this point. Okay. So I'm still waiting to get into a trade. All right, let's size these up. One of my when we understand that futures follow the cash market, okay, it's a good idea to have the stocks, especially the large market cap weighted stocks, visible to see. The NASDAQ is a market capitalization weighted index. And what that simply means is that the large market cap stocks have a higher impact than the smaller market cap stocks. Okay. So with the higher, with watching the large market cap weighted stocks, Apple's negative, and we can see that we have more positive and then negative, but Apple and Amazon came out with earnings. Okay. So indications are the market is still a bullish. Okay. And as we come over to the Qs, let's see. We have a pivot low and a pivot high. And until we take out two pivot lows, the trend is still up. In an uptrend, we look to sell short in supply, okay, and we look to buy in a demand. And again, our supply is above, our demand is below, and we're kind of in the middle of this right now, okay? I also prefer to use tick charts when looking at opportunities, okay, to make short-term trades. Yesterday, we were watching the Dow, and the Dow took forever as it was just going back and forth, okay? And we looked for that breakout, but it was taking so long for one candle, and I have it on a 300 tick. Tick chart just represents transactions. This is a great way to get a feel for whether the market is volatile. Okay, you have a lot of participants making it easier to make trades, or whether it is really quiet. Now, the longer it takes to form a candle with 300 transactions, you know that there's not a lot of participants. And you can see right now, even though your depth of market or your matrix, however, is moving up and down on very light volume, okay? And you can see it is light volume and volatile with the number of contracts being in low double digit and single digit numbers. The banks and institutions are not here. You're trading with the novice traders on light volume, which incurs a lot of extra risk. Okay. So the longer it takes to form one candle is all based on transactions. Okay. Let's see. What do we got on the Russell? Anything going? Okay. Russell gapped outside the prior day's trading range. Okay. So less chance of a gap fill on the Russell. Okay. Let's come back to the Dow. The Dow opened outside the prior session's range, also a less probability we will come back and fill the gap. Now, the NASDAQ has a different story. Okay, NASDAQ opened inside the prior session's range, giving us a very high probability that price will come back down to fill the gap. Okay. And the gap is basically the difference between the market open and where the 5 p.m. close. Okay, that's kind of the gap range area. We got a prices basing right here, and you can see traders on a larger time frame, they're not doing much either. Okay, so don't let yourself get into the fear of missing out. When you still go out to the large time frame, you say, well, what would I do right now with this 20-minute chart or a 15-minute chart or a 30-minute chart? And say, after a strong move up, I'd like a little pullback in order to get in. Okay. You know, I don't have a lot of evidence that says, hey, this is going to continue. Okay. See, even the large time frame folks are still just kind of waiting. Okay. The NASDAQ, we are expecting the gap fill, so I'm going to come back to that small time frame, see if we can find a way to splice in to that. First thing I want to look at is, are the stocks dropping or are they rallying? Are they trying to fill the gap or are they not? Right. And right now we see Apple has got a small green candle. But things are quiet, aren't they? Okay. There's no urgency other than what you put on yourself to jump in. If the stocks are not moving up or down, okay, then the futures are not going to be adjusted. Okay. Always remember, especially on the NASDAQ or sorry, on the equity indexes, stocks move first, which then adjusts the exchange traded fund, the Qs. Now, stocks first, exchange traded funds second, and then we have the futures follow that. Okay. Futures are derivatives. They follow the cash market. So the cash market becomes a very good lead indication. Okay. And right now it does still look like prices are pushing higher. Our next supply area, 20,334, 20,355. I'm watching for either a fresh accumulation of orders to be built, where I have a place to break into that move to the upside, or a fresh accumulation of sell orders where we will then push back down. Without a new accumulation of buy orders or sell orders, I must wait for price to get to supply or demand. Okay. Now, why do we use this picture? Well, there's a lot of reasons that we look to go long as price comes back down to the origin of the move. Okay. After all, who had the money? Who had the number of trades and transactions that could force price up like that? Okay. What we do know is that when price drops and stops and reverses, there's just no more sell orders at that point. There's only buy orders. After all, that's how a market is made. Price goes to fresh supply or sellers or fresh demand buyers. Okay. If we have an equal number of buyers and sellers, we kind of chop sideways while they're working on what direction they want to take the market. Okay. All right. So S&P getting a little pullback. Price is basing. Okay. That leg base was not in the right location. All right, so what we need to see is NVIDIA looking to fill the gap. And looking at this as a support level. Nope. How are we doing on crude oil? Nice. Anybody else take the crude oil trade? Yeah, we just need to clear that level. We do have a really small zone that's been tested. Okay, you can see that there on the 5-minute chart, there is a leg base right there. Price is tested at once, now coming back deep into that zone. And we'll set our target at 58.02 as first target. See, when we wait for the trades, it's very methodic. You know, where are the buyers? And that's what we're looking for. We participated in a short trade based off the open range breakout. Okay. Nice job, Miss Fay. And we took that entry. We had managed risk. We still have that risk on the trade. And if you want to take the risk off, you simply adjust your stop loss at this point. A good rule of thumb is once price has moved 2 to 1 away from your entry point, is to take some of that risk off. Now, part of the taking risk off on that can be that you adjust your stop. If you have multiple contracts, you could take one off, okay, which would reduce the amount of risk, okay? What I'm going to do is I'm going to stay in the full position. I'm going to adjust my stop loss down to a break even. Okay. Now I've eliminated the risk on the trade. Okay. And I'm looking for that potential reward. Target 1, 58.02, target 2, 56.62. Okay. All right, let's get back to the S&P. Okay, we're just watching for that base to come in. And once we have a qualified support level, that means prices hit that support 3 times. Then we might be looking to take the breakout to the downside. In order to take that breakout to the downside, we're going to need more help from NVIDIA and Apple, and also the Mag 7 or Mag 8. Now, this is what you know. When I come in to do a live trading room, okay, and we're looking for trades, we first gather information about the trading environment, okay? And all those little nuggets of information that I just shared in the prior, well, almost now for an hour, okay, have led us to say, hey, there's not a lot of commitment up or down at the moment. The banks and institutions between 8 a.m. and 11 a.m. are processing orders, okay? Now, some days it takes a little longer to process those orders than other days, okay? Between 8 a.m. and 11 a.m., these little footprints of demand or of supply, if they're hit, then can offer some very good trading opportunities. As we are watching and waiting for things to set up, look at Amazon's making a new low. We're seeing Alphabet push lower, Tesla push lower, Apple, okay. To the upside, Microsoft looking great, Broadcom, Meta still holding another big gap up, and also NVIDIA. So we got 1, 2, 3, 4 that are going up, 4 that are going down, and look at the result of that price action. Chop, 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 chop. Okay. So we need something, a catalyst. Okay. We need an opportunity to go long if price drops down to demand or an opportunity short if price goes up to a supply area. Okay. We have to have a very methodic way that we're going to approach that. And right now, since we do not have a fresh accumulation of sell orders or buy orders, we're waiting for supply or demand to be triggered. Okay. Now, we qualify support and resistance by having a minimum of 3 touches of resistance or 3 touches of support. Okay. I've only got 2 right here. Okay. Let's just change that fill color back to a neutral. Okay. Once it becomes a qualified support or qualified resistance, then we can look for the opportunity to participate or to apply a trade. Right now, this bounce, it looks like the trend line folks have just jumped in and starting to participate in a break of a trend line. And you can see how the trend line folks getting sucked into that trade, taking the trade short, okay, are now kind of contemplating, should they be getting out? Okay. We need to let the market participants, the big banks and institutions, plot out and show us what they want to do. Uh, 8 minute. Oh, before the stocks, 8 minutes tends to be a pretty good gauge for me. It's a preference. When I'm intensely in a trade and the risk is elevated, I may drop down to a 3 minute or a 5 minute chart to see what other traders are looking at. Okay. Now, an 8 minute window gives me a little indication. It doesn't make a trade. It just shows, hey, you know what? Microsoft's got a big green candle here. Okay. Now, if I was looking for a place to sell short and I wanted to see when the stocks were turning, I could drop that time frame down a little bit. Okay. So I'm flexible with the time frames, especially when I'm approaching a trade. I want to get in at that earliest turning point. Now, the way that the chart or the futures make adjustments, looks like we're creating a bull flag here on the Qs. Well, I lost my thought here. It'll come back. But making the adjustments. So if I was looking to take a short trade, okay, I would want to look, I've dropped these charts down to a 3 minute chart, okay, and the short trade be pretty aggressive going against the trend. But if I was anticipating there's still some sell orders there, I could drop down the time frame to a 1 minute, 3 minute, 5 minute, okay, or I can leave it here and just kind of get an idea of what the bigger picture, what are the bigger traders thinking, okay. What we do know right now is, boy, this NASDAQ is pretty choppy. Okay. Yeah, we're always flexible for adjusting the time frames to get the right picture. Okay. And how are we doing with crude? All right, crude is still working. And we're still waiting for gold coming back down to potential demand. We want to anticipate, with the leg base group of candles, we can see that the leg candle leaving the zone is bigger. Now, when that leg candle is bigger and you got a very strong move out of that area, we often see that the zone can be used twice. First one is right off the proximal line, and the second time price often goes a little deeper into the zone. Now, again, these are hundreds and thousands of pictures of confirmation that we've used to develop our opinions based on technical patterns, okay? With gold, I expect a bounce off the proximal line Okay, and then we expect price to go deeper into the zone. Now that's all based off of the leg base that we cover in some of our lessons. Okay, knowing whether the zone can be used twice, whether price should go deeper in the zone. Okay, it can eliminate or it can reduce the amount of risk that you potentially have to. Okay, so with the way that the leg base is, leg candle leaving is bigger than the leg candle in the zone. I'm going to target an entry inside the zone at 32.39. Okay. Oh, wow, we got real close, didn't we? So let's take a quick look at this right now. I mean, we've only had one trade so far. We've got, there's a 1-to-1. We've got a little better than 2-to-1. And yeah, it looks like it did get a 3-to-1. Okay, but we're going to see if there's any leftover unfilled orders down here at 58.02. Now, let me be clear. You don't have to wait till price gets to that area. You have a profit, you can take a profit anytime. We had calculated risk. We had a profit objective. Currently, we had made a 2-to-1 and almost a 3-to-1. Okay, nice job, Callie. Okay, so I'm going to hold out just a little bit longer, but that becomes a choice. I realize that I've already made a 3-to-1, price has already made a 3-to-1 move. That does not mean that that zone is going to be hit. Okay. Taking profits while you're learning and putting things together is very important. Okay. Even if every trade you take is a 1-to-1 at this point. Okay. And then as you get more comfortable with the charts and the patterns, maybe you start going for 2-to-1s because you recognize the trading environment. You're implying using trend. We're also looking at heating oil, came right back down to support and getting a bounce. Heating oil is one of our lead indications. Heating oil and gasoline tend to move prior to crude oil. Okay. But it's okay to take a profit anytime. Okay. And very often when you're using these techniques, 1-to-1, you get to about 87% of the time. 2-to-1, the percentage drops a lot. And of course, 3-to-1s are pretty decent little trades. Okay. So the choice is yours. We've already taken the risk off the trade, and you can determine by outside pictures whether you want to stay in the trade a little bit longer or not. Okay. So great job on those. And Miss Fay pointing out about the 10 o'clock reversal. Excellent. I'm going to go ahead and grab this trade. I'll take the profit. I'm anticipating a bounce. It is a 10 o'clock reversal. Okay. And this is done with 2 micros. We started off with $56 worth of risk. And we're looking at if we get that 58.02, it's almost like you want to hit the reverse button, right? Okay.
Order fill.
There we go. Okay. Now this zone is not in the right location for me to go long. Although I do expect a bounce 1-to-1, the size of the zone compared to that daily ATR, 87 out of 100 times you'll get a 1-to-1 bounce. Okay. Nice job on everybody. It's calculated risk. Okay. And also calculated reward. But boy, that NASDAQ is still just chopping sideways. And so is the S&P. Take a quick look at Russell. Imagine what all those folks are doing with these 15, 20-minute charts. All they've been doing is up and down, okay? Not easy trading environment, okay? Recognizing when we don't have an easy trading environment ahead of time is important, helps you manage that risk. We have a nice chart pattern developing here on the Russell, which is common with an ascending triangle. The daily 50 moving average right above it. We have a small leg base zone just above at 2026 to 2041. And our prep screen zone up above. Okay. 83% of the time after a continuation pattern comes a reversal pattern. Okay. So we have to anticipate that some of these price patterns, continuation patterns in particular, lead to a reversal pattern. Okay. Now the Russell does have a nice move up, and we have a resistance with a continuation pattern, ascending, descending triangles and such. Often the breakout is on the fifth time. 1, 2, 3, 4, 5. Didn't happen. 6. Okay. So we need to be careful on this breakout. Okay. And wait for that leg base to set up. Okay. Dow. Dow's just not giving us any solid picture. We do have supply 4170 to and 41,623. What do we do now? Okay, wheat finding a little bit of supply up there. You can see that wheat hit that area. We got a red candle coming out of that. Okay. We are anticipating the price pull back into that demand. There are some unfilled orders at that point. And we probably drop down to a smaller time frame to get a good picture of this. You can see the price shot up of 3 times off of that level. Okay, so at this level right here, price came down, found the buyers once, twice, and 3 times, and then finally took out those buyers. Okay, leaving with a small supply zone where we might have some unfilled orders. And this is the picture that we're looking for. Okay. Now the picture is just part of the equation. We have to look at the things outside the price chart as well. Okay. But notice the leg base group of candles. Notice the support, the sell territory, and the structure of it. This is proof that there are some unfilled orders there. Now, what we have to determine is there enough unfilled orders to keep the trend going lower, okay? Or if there's just a few unfilled orders, okay? The inverse of this is that we made a fresh accumulation of buy orders. This is where the buyers stepped in last time. Price made a higher low before it took out the sellers. So this is the area 532, 530. As we evaluate, we'd love to see the price come back down to that, pick up the rest of those buy orders, and then shoot back up, and we'll find where we have the opposing sell orders are at. Okay. All right, copper coming back down pretty good. How's our gold? Yep, here comes gold coming around the far outside. We're still waiting. Okay. Crude oil went down a little bit further, but you know what? We put the money in our pocket. Happy Friday, doing the happy dance. Did you get that whole move, Miss Faye? I know you watch that crude oil and natural gas like Chris does. Good job. Nice way to start the day. All right, so we are pretty much done with our economic reports today. Okay. We do have Baker Hughes oil rig count. All the earnings reports, I think, are out. You might look at the earnings that are coming out later. I do want to keep pointing out that, yesterday was an 8-day up in a row for the S&P. When looking at consecutive up days, the indexes go up or down. They usually happen in 3, 5, 8, and 13, all Fibonacci numbers. Now, the rare for 8 consecutive up days in a row. What's more common is a 3 and 5. Often the media will point out that we've had 4 up days or we've had 5 up days or down days. Okay. And when the media comes out and says that, it's that wink, wink that, hey, there's a possible turn. Now, if you have 6 up days, you can anticipate 8. Okay. 8 is rare. 13, extremely rare to have 13 consecutive up days in a row. Okay. And you can even use this on football stats too. If a football team has 13 consecutive wins in a row, often they're going to the Super Bowl. Okay. And usually that 14th game is kind of a throwaway game if they've already qualified. Okay. A lot of things happen around those Fibonacci numbers. But 8 up days in a row is rare, extremely rare for 13. Okay. This is why today I'm being very defensive on my long trades and trailing them with a good stop loss. Okay. Because I am anticipating at some point we're going to have price pull back. If today closes positive, then we have 2 more up days, and we would anticipate Sunday night and Monday and going into Tuesday to be continued up days. Okay. Which would be extremely rare. And then on Wednesday of next week, we would anticipate either Tuesday night or Wednesday, expect a pretty strong pullback. Okay. All right. Stocks, NVIDIA, Microsoft, and Meta, really strong movements up. Let's take a look at these large market cap. Broadcom breaking out of a large time frame resistance. NVIDIA is still basing right at that resistance. Microsoft almost back up to the all-time highs. Yeah, we might have an update. I mean, looking at the stocks, a lot of them are poised for a good breakout to the upside. Microsoft seems to be in the lead, getting back up to the all-time highs. We've got a little more work to do with the other ones. Now, why do we make reference to the stocks when we're trading futures? Because the futures, all of these stocks are listed on the S&P 500. They're listed on the NASDAQ 100. And we have Alphabet, we got Meta, we got Amazon, we got Microsoft, Apple, and NVIDIA all listed on the Dow. Okay. So you're going to see the Dow, S&P, and the NASDAQ all pretty much correlated because there's so many overlapping large market cap weighted stocks that are going in the same direction. Russell looks like it might be giving us a trade opportunity here. Noticing here on Russell, we have resistance being built in the context of an uptrend. Okay, let's we are right at that 50 moving average, which can be price closing above the 50 tends to be very bullish for retail. We see that sellers have been pushing price down more than 3 times, making a nice resistance area. Some days we have really good trading opportunities, and some days it's just kind of choppy. But we were prepared for this. Throughout the morning session, we covered or the pre-market, and then of course the market open. We covered a lot of topics. Okay, a lot of pieces of information that help us understand the trading environment. And then we use the charts to time our way into a trade, to apply one, and how we manage risk. Okay. And the NASDAQ, we're still looking for that gap fill, and that's back down at this area here to kind of give you an idea. Now, in order to get into a trade going to the downside, we would definitely need to see the Qs and the stocks start showing some bearish patterns. Okay. Continue to draw out your peaks and valleys on the exchange traded fund. Price taking out two pivot highs or two pivot lows would indicate that you have a change. Okay. All right, we did find some buyers over here, but those buyers are just the leg base group of candles. And we often just see a one-to-one bounce off of that, kind of like what we're seeing right now. Okay. So this is not a place to go long. It is a place to expect a bounce of price. Okay. Nice job, everybody, and great exit on that. Okay. If you guys took profit. How'd you do on that crude oil trade team? Do pretty good on that? Wow, beautiful job. All right, we have a little resistance right here. Potentially some buy orders have been accumulated. Okay, if you choose, we got a little speed bump, okay, which is this little area right like that. Now, when you have a speed bump, let price break out first, pull back into, now we have a buy territory, find that leg base group of candles. And be willing to wait. Okay, now if taking breakouts when you have that little speed bump there, okay, can be like a trap. Breaks out, you're thinking great, and then you tighten up your stop too soon and it drops down and takes you out. Okay. You will observe this the more you watch these particular trade setups. See, here was an example where we had a little speed bump above. Price broke out, triggering those long trades and then drop down. And then just to scare him again, it broke out a little bit more and then dropped back down. So the behavior of the price action when that speed bump is over on the left, okay, is we have to anticipate that. Now, if there was no speed bump and it was a straight red candle down, we'd have different expectations of that breakout, okay? The more you study and participate in these pictures, the more you become prepared to wait for that trade opportunity, okay? In order for this zone, and what you're witnessing now is the where to take different trades. Now, if you're just a supply and demand trader, price needs to come back down to the origin of this move up where we had buy orders, okay? Breaking resistance shows where we had sellers pushing price down a couple of places, 3 times. And then we saw that they just took out the sellers, okay? We're also navigating around a speed bump. And we realize that there's a big pocket of points up above, okay? Now, pocket of points is just a light volume price drop. And this is that area before we get back up to the April 2nd price drop. So if the market is going to continue to push up, we need more help from Apple, okay? We need to qualify a demand. And if you look at the picture, you would anticipate that price will drop down into this level, and then we'll look for the continued move up. This exposes the risk ahead of time, 56.85, 56.78. Now, of course, you can go down to a smaller time frame if you choose, okay? Sometimes that helps minimize your risk, but too small of a time frame can also get you chopped up in the volatility. So find that happy medium which fits your trading plan, okay? Use the leg base group of candles. Wait for the price to pull back, okay? Now, in order to qualify this is a demand zone based on using the leg base, but it's not fresh. I mean, it's fresh one, yes. It's not active. It becomes active once price moves away greater than 2 to 1, okay? So this zone and the risk on this trade, okay, price has not moved greater than 2 to 1 away, okay? Once it does move greater than 2 to 1 away, then we'll be more aggressive at taking an entry, okay? Once you have a qualified resistance area and price pulls back below it, we can then look to take another breakout trade to the upside, 56.94, okay, to go along with the trend. When you're qualifying price as a demand zone or as a supply zone, there are some additional criteria that you look at to make a fresh, active demand zone, okay? So I'm going to place a trade on the S&P, taking the break to the upside, potential target 57.43. I'm going to enter that trade at 56.94 3/4. And once I'm filled, I'll come back in and place a protective stop loss, okay? Now, this is a quick retest of a leg base, but it's not a place to take a trade unless you have a 2 to 1 or better move away from that area, okay? All of these little things are part of a trading plan. And as you gather information, put that information together, okay? As you put the pieces together, you then must teach yourself or watch other instructors. How do they apply a trade? Okay. See, there's a process. we're looking at the trading environment. Is the trading environment bullish or bearish? Are futures overbought, oversold? Is the risk elevated for me to take a long trade versus a short trade? Okay, so we're kind of looking around, gathering all that information. Okay. As we start to bring that information into light to help us choose a direction for a trade, okay, we have to then plan on how we will manage that risk based on your trade plan and how you will apply the trade. Often people can make it sound really simple. Well, you just go long, you just go short, hit the market order, okay? But they don't know how to manage the trade. Now, if I'm taking the breakout trade, okay, I will use an area, this last little pivot low, I will use as my protective stop loss. Now, right at this moment, I don't know if that's going to be my pivot low, but I can assess the risk at this point. If I am filled, my stop loss will be 56.86. So how many points am I risking? Is the potential reward okay to risk that much for that potential reward? What are the obstacles up into the left-hand side of the chart? They may interfere with my projected profit target. Okay. See, these are all very good questions. And if you watch how price moves and you watch how these things are put together, okay, you will find that you can very methodically collect information in the pre-market and then come back in and apply a trade. Okay. Having your rules to apply a trade often comes from the chart, rules to collect information outside the price chart. Okay. Because what we need to see is we can see that the risk is going to be elevated because we don't have a follow through with NVIDIA, but Apple is starting to come back pretty strong and come into that gap area. All right, so from 94 to 86, we have about an 8-point risk. I prefer right now to use a trailing stop. Okay, so if price does continue up, my stop loss will adjust. I currently have it set at 10 points. If you want a hard stop, then you would just come down and you would say, okay, 56.86. That's where I want to place that hard stop. Take a moment. Look at the dollar amount you could potentially lose. That's risk. If you put on a trade and the trade is active and you say, oh my gosh, that's 870 bucks. You may say, I don't want to lose that much. Then you need to reduce the position quickly while you have a small profit. Okay. Or just get out. We all make mistakes, and I've made a pretty costly one to myself yesterday by thinking I was trading the micros, but I was actually trading the minis, and yeah, that left a mark. Hey, thanks, Chris. Chris also posting some numbers in there, looking at 57.10, 57.12 area. Okay. So we have this area here from my breakout entry to my stop loss. Good. Okay. I have a 1-to-1 at this point. And we look at 2-to-1, about 50. So the trade expectations on this, as what Chris pointed out, he's looking at about a 2-to-1 risk versus reward. Okay. And if this trade does play out to the target, we'll be looking at about a 5 or 6 to 1 reward to risk ratio. Okay. Have a plan to manage your risk at this point. Okay. Once price gets 1 to 1, I will take half my risk off. Okay. Something like that. Once price is 2 to 1, I will eliminate all risk on the trade and take one contract as profit. Okay. Be thinking about how you're going to protect that profit and when you will adjust that risk. Okay. Now, what's going on outside the price chart that can support the move continuing? Well, the bank index is still pushing higher, almost at a point we're going to break the session high. The BKX is the bank index. Okay. And what we need help from right now is NVIDIA to keep pushing up. Okay. Now, if you're in the trade and you're anticipating, you got your finger on the button, you're a little anxious. Okay. Take your NVIDIA and Apple as two large market cap weighted stocks and drop that time frame down to a 3-minute. Okay. Now, as you're watching NVIDIA and Apple right now, Apple's got a stronger move over the last 5 candles, move to the upside. You're going to then monitor NVIDIA, and what you need help from is NVIDIA to keep pushing up. Okay, taking out a couple of these prior pivot lower pivot highs. Once it starts breaking 2 of those lower pivot highs, then you see on that time frame that the trend is getting stronger to the upside. Okay. As we are in S&P right now, we have achieved a 1-to-1 reward to risk ratio. Our profit is $82. Okay. We were risking 87, so we have 1-to-1. And now I can say, you know what? I am going to adjust my risk. Instead of risking $87, maybe I'll adjust it up to where I'm only risking 40 at this point. Okay. Once price gets 2 to 1, I'll take the risk off the trade. Okay. Close one contract, stand up, do the happy dance, and then watch the rest of the trade play out. Okay. Always have a plan to manage your risk, understanding what that risk is, also a plan to adjust that risk, and a plan to gather pieces of information like we did earlier today. Okay. All of it helps you prepare for what's going on in the market share. We took most of our session this morning because things were just chopping and going sideways. We stayed out of the equity indexes. Okay. And we took a nice little trade on crude oil. Okay. Identified that what that group of candles looks like right over here. And as you identify the leg base group of candles, you'll see very often price has some leftover buy orders or sell orders at those points. Okay. And the more you become familiar with those leg base group of candles, okay, we just had price come right back into one. Okay, got the leg base. And look at that, price turned and started going back down from that one. Okay. I don't know what it is, but the only assumption I can make is that when price returns to that leg base, there tends to be some unfilled orders. Okay. Now, having that leg base group of candles in the proper area in a sell territory or buy territory can have a much greater trade result. Okay. All right. So I hope you picked up a couple of little nuggets, little pieces of information that we shared throughout this. We do the live stream every Friday just to give people a chance to look at what we do, how we put our information together and make some trades. Monday, Tuesday, next week, we do have a pre-market routine class. All the little things that I just covered, anticipating the direction, the move, the volatility, when to wait, all of that is in our pre-market routine class that we will be doing Monday and Tuesday, late afternoon and early evening, East Coast time. Okay. Check out our website and get signed up. We do have a few more open slots for that, and looking forward to seeing you all there. I hope everybody had a good trading day, and just be patient with yourself today. It's Friday. Wait for the good setups, and wait for price to come into supply or demand, and we'll go from there. I'm going to move over to our Discord room. We have an active voice channel over there, and I will be in the background. It's time for me to go and make some trades, make some money in my personal accounts. And I appreciate everybody for coming in and spending some time with us. Let us know if we can help. Have a great trading session, everybody.